Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, May the 17th, 2013. Excuse me, I apologize if my voice is a little bit scratchy. I've got a bit of a cold going into this beautiful May 2-4 weekend. I'm recording this video on Saturday the 18th. I hope everybody's having a fantastic May 2-4 weekend, and I hope everybody has a fantastic weekend. So let's jump into the analysis on the the Dow on the daily chart, as we usually do. So the big news in the market this week in the stock indices is we broke and closed at printing new all-time highs again, closing at around 15,315 in the Dow future. So we're at new all-time highs. However, I'm not that excited about this for the simple reason that if you take a look at this sort of trend up channel that we've defined here in this uptrend, we had going into Friday, we had a strong close, but we had some major resistance at the top of this channel. And then we broke to new highs, but we're still at the top of this resistance channel. So if we break through this resistance channel and go parabolic, I would consider that sort of a blow off top with the expectation of a return back down to reality and back down to the average, which would be somewhere around this breakout point around 14,800 or 15,000. So I'm not really that interested in this market. I think the upside potential from a risk reward perspective is done. I'm looking for, if we blow through here, through this channel, I'll consider that a type of blow off top, or at least a short term blow off. Where I'd be interested in this market is more down, at some of these more realistic levels down to support around the 15,000 or the bottom of this channel. So somewhere around this, 20 period moving average. The bottom of that channel is what I would like to see. So we were struggling with, I actually had a hard time trading this because we were struggling with this resistance area for 3 days. And then we finally broke through it on, let's see, that was Friday, Thursday, Wednesday, Tuesday. So we broke through a 3-day consolidation through this resistance and into the top of the channel. But once we were actually touching the top of this channel and pulling back on an intraday basis, and then we had a really strong close on Friday. I had a really tough time getting on board that because we're right at resistance there. So that being said, let's take a look at the S&P. Now, having said that, there's no reason to short this market in my opinion, but I don't really have any reason to get long this market either. So let's take a look at the S&P futures. So the S&P futures are sort of above their channel. If we can sort of draw a sort of loose sloppy channel here, but the S&P closed at new all-time highs. I really don't know where this market could go. We're at 1663. I would hazard a guess that it's gonna 1700 would be a challenge point because it's a round number. But when you're at new all-time highs, you don't really have any resistance overhead. So looking at the market from all the different perspectives that I look at, using the Darvas squeeze setup and using, breakout extensions. Like, for example, we had this sort of cut pattern here. And when we were looking at a breakout extension of that pattern with the 161, 1272 and 1618, we've already exceeded those targets. So the only other level that I'm aware of that might be in play is the 2618. 2618, which is a number that I don't really use a lot. One of our traders from our live trading room gave me this number. I've heard of it before, but I don't really use it. And I asked him, what do you look for an extension above a 1618? And he said, well, the 2618. So let's throw the 2618 here on the chart, and you can see we're right at the 2618, and we just probed above it. So be honest with you, I really don't know where this market can go. It's really, it's really up there. Excuse me, I just had to pause the video there to cough. So there's the S&P. Let's take a look at the Nasdaq. The Nasdaq we were looking more from the perspective of a sort of cup with handle pattern. Okay, so here's the cup, here's the minor handle, here's the breakout, and then we were looking at, the 1272, which we tested and exceeded in the 1618. So I'm looking at the Nasdaq potentially, from my perspective, possibly testing 3093, 3093.50. So this to me is a tradable pattern, but it's already, if you're not already on board that move, then I don't think it's really, there's really not much to do here. You'd have to, I'd be looking for a pullback. If you're interested in getting long this market, I would, my sort of modus operandi going into the markets now is, does the risk reward make sense? That's my consideration. So when I look at this market, I look at it from the perspective of, we've come so far, and does the risk reward make sense? Getting long here, how much potential reward could you be looking for, and how much risk do you need to take? So that's sort of what I'm looking at, and for me personally, it doesn't make sense. Let's take a look at the transports. Incorrect symbol. Okay. $, TRAN. Okay. So the transports are at, closing at new all-time highs as well by the looks of it. And looking at this sort of cup pattern here, we've placed the Fibonacci's from this high to this low, and the breakout extension, we're testing the 1618, and we closed right around the 1618, maybe 3 points higher. So, there's another data point. The transports are net bullish, but they've reached any achievable targets that I'd be looking at. So let's take a look at the dollar index. Dollar index is breaking out. It's probably going to have some challenge points just shy of 85. But we're going higher in the dollar index. And if you look at the euro was actually, the euro broke the $1.30 level and is coming back down and retesting these lows right around 127.59 in the euro future. So dollar index looks strong, euro looks weak. Having said that, I believe that the dollar index is close to resistance and the euro is close to support. So, I'll be looking for, I don't think there's a lot of, much more downside in the euro and much more upside in the dollar index in the short term. I think in the short term, they're both due for pullbacks and retracements. So that's just my opinion, because they are close to resistance and support respectively. Let's take a look at the gold. Gold looks really weak. We haven't seen that sort of scenario play out where we get, a sort of higher low in place yet, and then a push back above 1480. That's the scenario I'd be interested in getting on the long side. But if we break this low at 17.55, and we break this this sort of spike low that was put in off of this crazy down move, and if we get that sort of a decisive break of this level, then we're going to have to reevaluate, and that is a decision point. That would be a decision point to be looking at shorts with a decisive break. And I say a decisive break because you can probe below it, find support, and then push off. So ultimately, the decision points that I have in mind, or that I'm interested, are above 1480 for longs and below 1317 for shorts. So that is a really wide range of roughly 150 points. So having said that, I consider this entire area in between there from a swing trading perspective, just, I call it a dead zone. But it's probably obviously, day tradable if you're a day trader. But from a swing trading perspective, I would need to see some guidance outside of that range to get interested in the market. And that is, quite a wide range. So let's take a look at silver. See if we can get any clues. See, silver's right at retesting those lows around 2192, 2193-ish. So, maybe silver will give us a sort of heads up before gold does. I see a minor technical divergence here where we're coming down and printing low, but we've got a slightly higher low in this trending indicator. It's not really that pronounced or prominent, so what I'd be looking for here is if this stochastic is going to roll below the 20 line. If it rolls back up above the 20, then I'd be looking at, this potential area to hold if we stay in that area while this, indicator does that. Let me go back to gold and see if it's doing the same thing. Yeah, you've got the same thing with the stochastic. You'll notice that when the stochastic does that, you get, short-term strength back up to the high side like you had here. You had some of that going on back here, back here a little bit. So, that's something I'd be looking for, at least a bounce off of those levels if we get the stochastic rolling back above 20. So that was gold. We looked at silver. Let's just take a look at copper. It's not a market I look at that often. Now, this is interesting. Copper put in a double bottom. Do you see what I meant? Here's an example of what I meant about be careful if it breaks the low that it's a decisive break. Because if you look at copper sort of seems to be leading this, where it is, it put in a double bottom. So imagine you can't see the right side of the chart and copper's coming down to retest that low, and you think, okay, it's over. It's over. Copper's done. It's put in a new low, and you short that, and then look at what happens. Boom, you get your head ripped off. So when I look at that, a decisive break, I'd like to see at least 1 or 2 bars close below the low there on gold and silver. But having said that, looking at copper, the metals, you expect them to be somewhat correlated, all the metals. And you look at copper here, copper put in a low, put in a slightly lower low, more like a double bottom, found support, and it broke this trend line. So, and now it's set to put in a higher low right in this area here. So if you look at copper from that perspective, that makes me really cautious on gold and silver to the short side. So I'd be keeping an eye on gold and silver and seeing if they can find some support at those lows, and that might even be a good area for me to look at a potential long, because the risk reward is defined. Like, looking at taking a long off of a low or retest of the low, you can have a fairly tight stop underneath the low, where you just give it a little bit of room, and then if it doesn't close there on a closing basis, then you tighten up your stop once it bounces. If it does close below there, then you just get out. So that's sort of what I'm looking at for gold and silver now that I've seen copper, which may be leading the metals here. I'm not quite sure yet. Let's take a look at the crude oil. So crude oil it's been a really, really messy chart, but you can see that the analysis that we're looking at in terms of a break above this trend line here and a break above this wedge with a busted pattern type of scenario, it still has the potential to play out. So, we talked about weeks ago, we didn't like this, this low as an area to get short because we felt we were at some pretty decent support. And then we've been talking about over the last few videos, over the last couple of weeks, the potential for, a Thomas Bulkowski style busted pattern scenario where, we broke through the bottom of this wedge or this symmetrical triangle, and then, we're coming back up, and if we break through the top, we can get above the 618 at 96.84. We might be able to get something going to the high side, but having said that, you've got your resistance here, but then you've got your major resistance between $100 to $101 a barrel. So that's sort of what I'm looking at there, although from a pattern analysis perspective, this looks like it still has the potential to play out. So let's look at natural gas now. So natural gas pulled back. It didn't quite hit its 50% retracement of this low to this high. It looks like it's finding some support in and around there. In order to get anything going back on the positive side for natural gas, I think we really need to clear break back up above this minor downtrend line. So that doesn't look all that interesting to me right now. I think we've covered all of the major markets. Just a quick reminder: normally there would be a meetup next weekend. The meetup's being canceled, and we'll look at holding a meetup sometime in the future. We're getting into the summer months now. Things are starting to slow down, although they're starting to pick up around the trading room here with new members coming in. The actual meetups themselves, a lot of people are taking the weekends to enjoy time off with their family with the nice weather. So the meetups are starting to slow down a little bit for obvious reasons. It's a trend that we noticed last year as well. So we're going to lay off the meetups for a little bit. But we are going to be running the CSTA Oakville meeting next month in June. So stay tuned for that announcements over the next couple of weeks. And with that, I'll leave you with with the information presented here. And I hope you have a fabulous May 2-4 weekend and a safe May 2-4 weekend. Don't drink and drive and all that good stuff. And good trading. And we'll look forward to seeing you at the next video update. All the best.